First and foremost, we're going to start here on the euro dollar. We're going to start on the weekly chart, right? This is something we looked at in the past on the euro dollar, but I want to remind you guys, because I know we have new viewers to the channel each and every week. Subscribe if you're not already. Big help to the channel as we try to reach 55,000 subscribers by the end of the year. But what we've done on the euro dollar here is two things. One, we have recently broken and closed above a previous level of structure, which is a good sign for bulls. However, we have also ran into another previous level of structure and have held, which is not a good sign for bulls. So what we're doing here on the weekly chart is we're actually putting in, or actually we put in to end the week, a confirmed double top. A double top, we've been having this discussion on the chat lately, so this is a perfect example for you. A double top is when the market pushes up, we pivot at a certain area, we try to retest, and we hold again for the second time, hence the word double top. Now, this is not a double top that I'm interested in trading because we just broke and closed above structure despite holding at another level of structure. If you guys know my philosophy, I have very specific rules for how I interpret a price chart and what each thing means. For example, a break and close above structure allows me to predict that price is likely to go higher. However, a hold at structure stops that prediction that price is likely to go even higher, but I also don't think price may not go super lower because we just broke structure, right? It's a whole thing, right? Pretty much at this time, we have, or I predict, that we're going to be in a period of consolidation. Now, on the side note, there's a whole tariff thing, and there's lots of what if I think the ECB has an interest rate decision coming out next week. Let me just bring this bad boy over real quick so you guys can see it. Is it next week? Yeah, ECB is going to be next week on the 5th. So a lot of stuff can happen, but from a technical perspective, here is what I think. It would not surprise me to see a little bit of relief and to see a little bit of consolidation. If we do, we have two different plays available for us, and they're both going to come in the form of what we call advanced pattern formations. You'll hear them as harmonic patterns as well. So we'll start off with this one here on the weekly because it's very easy to see, and this is going to be a potential bat pattern. This move right here, our swing low to our swing high, is going to be our X to A. Our A to B, as you can see right here, if I catch up with my mouse to my words, there we go. Our A to B is going to be right here, not hitting the 618 retracement, but passing the 50%, putting us on alert for bat pattern. Our B to C comes here on our retracement, and then our C to D would be expected to occur down at the 886 Fibonacci retracement, which comes at a pretty cool level of structure. So a good place that you would want to look for longs, even if this weren't an advanced pattern formation. Now, where things get a little bit tricky is if we go down to the daily chart, and this is where I can sense that two different groups of traders are going to have two different opinions on this setup, and this is common. One of the hardest hurdles to clear when we work with new traders is the ability to read a price chart, ability to read the ebbs and flows, the extensions, and the retracements, because there's a lot of subjectivity to it. Now, there are different indicators you can use to help you out, but even then, right, there's going to be a difference between what your indicator shows you and what your eyes show you, and that's just the uniqueness of the market. My advice is always this: if you're someone that is truly indicator-based, stick with an indicator and just blindly follow whatever your indicator shows you. If you're someone that is more on the artsy side of that art and science balance that is trading, my suggestion is that you take the time to develop the skill of reading a price chart, train your RAS, your reticular activating system, and the more you do that, the more your eyes and your brain will start to discover and recognize the type of moves that are for you and the type of moves that aren't for you. And again, the whole goal is to be consistent in what you see. You can care less what other people see. It doesn't matter. They're not trading for you, right? Be consistent with what you see. And I say that to say that, right? That's an interesting phrase. I say that to say that. Awesome. That you're going to have a group of traders that see this, even on the daily time frame, as a swing low to swing high, an impulse leg. However, there's probably a group that says, well, Akil, I actually see this, and then I see that, and I see this up here as being my impulse leg. And if that's the case, that's going to significantly change what we're looking at. Kind of, right? Bear with me. If this is going to be our A leg right here, you can see that the biggest difference is that instead of price action nearly missing the 618, we actually do hit the 618, which changes the potential pattern from a bat to a Gartley. I'm going to quickly bring a Fibonacci extension out. That way we can project where our Gartley is to complete at. And that Gartley pattern is going to look something like this. Swing low to swing high, X to A. B is going to be the same. C is going to be the same. That decompletion is going to be different yet the same, right? Different in that it completes at the 127. However, the same in the fact that, if I can find my, nope, that's not what I want. Where's my Fibonacci? In the same that it doesn't complete too far away from that 886, right? Our 886 was down here. Our 127 is up there. So they're in similar zones. The biggest difference, however, is going to be your stop loss placement. If you're looking at stop losses for this Gartley pattern, the small one, I'm just going to briefly measure these out. You're going to see that your stop loss is probably going to be right here. And again, this is that zone we spoke about. That is a powerful zone of structure. Not the greatest, wrong tool, Akil, not the greatest place to have a stop. You'd prefer to be underneath it. The stop for the bat pattern would be underneath it, so it puts you in a much safer position. Now, I'm not saying this for you to choose the bat over the Gartley because it has the better stop loss. You want to choose which one you naturally see, but I thought it was an interesting look at this specific pair and the two different ways that traders can view it. Either way, if price action were to go down to this level, this would be a potential long at either your Gartley area or your bat area.